Hey guys, Joel Frank here, market analyst for YouTrading. In today's video, we're going to be doing a quick recap of some of the events that have happened so far this week, talking about some of the themes that are currently in play in markets and potentially how things could play out for the rest of the week. I want to start here by looking at the economic calendar because the data so far we've had this week has really been the main thing. Um, Pretty much we had the flash PMIs out of the Eurozone, UK, and US yesterday, and pretty much across the board showed that manufacturing sector activity is weak and continues to weaken, or at least show that the manufacturing sector remains in contraction. But services data has been robust. Like you can see, we saw upside surprises in the Eurozone. Okay, the UK was a little bit weaker than expected, but still strong at 55.1, 55.1 as well out of the US, which was stronger than expected. So the strength of the service sector across these major economies is pushing back against expectations that there's going to be a recession later this year. Strength of the services sector, also the ongoing strength of the labor market, particularly in the US. Um, Other sectors of the economy as well, like new home sales, looking pretty decent there out of the US. Um, and then inflation remains sticky as well. Remember, okay, we have had the headline US core inflation go back below 5% year over year, but headline, not core inflation, just headline inflation. But core inflation remains sticky above 5%. Which is a worry for the Fed, and then a worry for the Bank of England. Look at this. You have the headline CPI, a big drop from 10.1 to 8.7%, but we were expecting a drop to 8.2%. And if you actually looked at the core, which we don't have on this calendar, but the core rose to its highest since 1992 in the UK. So that's going to be a big concern for the Bank of England. It certainly seems to be having an impact on markets. I'll show you markets in a second. But it pretty much means that the Bank of England is going to remain under pressure to keep hiking interest rates. And, the Fed, they keep an eye on what's happening across the pond in the UK and in the Eurozone. If inflation pressures are sticky or worsening in these economies, that's potentially a harbinger of what could happen in the US. Or it could at least show that, okay, maybe inflation won't spike back up again, but it could remain stickier than thought. Now, we do have the Fed meetings coming out later today. And while Fed Chair Powell indicated that a pause in interest rate hikes is likely at, last Friday, a bunch of other Fed policymakers that have been speaking recently have been talking about how they maybe favor continuing with rate hikes, or it's a toss up, they're not sure yet, but it's still a big, big possibility. So, yeah, we're going to be watching Governor Bailey's comments and the FOMC minutes later today. Those are going to be very, very important. And before we talk about what's happening for the rest of the week, let's just quickly run through what's happening in markets. You can see stocks pulling back from recent highs. S&P 500 down nearly 1% after dropping over 1% yesterday. Similar story with the Nasdaq pulling back from recent highs. US yields, strong services data, strong UK inflation data, hawkish Fed speak, keeping the 2 year above its recent range. Same story with the 10 year. It's the wrong ticker. Same story with the 10 year there. You can see it's around 3.7%. DXY also doing well amid strength in yields, weakness in equities. Seems like it's breaking above that. If you look back at my trade idea video yesterday, I talked about this ascending triangle. Looks like we're getting that break, which could now open the door to a push higher to this kind of area. That's if the US data keeps being strong, inflation sticky, and Fed sort of hawkish, talking about more interest rate hikes, pushing back against rate cut bets. Gold languishing when you've got the dollar and yield strengthening. It's not necessarily good for gold. Gold's technical setup is not great either. It's below the 21-day, 50-day moving averages, broke below that ascending triangle, broke below this uptrend that had been in play. At risk of further losses potentially. Oil advancing, but still way below its recent highs, from which were printed after that surprise cut in output from OPEC. And Bitcoin also pulling lower as you would expect, with stocks moving lower, dollar moving higher, yields moving higher. potentially at risk of further losses now. It's broken some key short-term support in the form of this little uptrend, 100-day moving average, recently found resistance at the 21-day moving average. You know, you can think it's probably going to test this resistance area in the 25,000 zone. That looks very likely in the coming sessions, and potentially even a dip even lower than that. I mean, you have this uptrend from the late December lows. Yeah, you could potentially get as low as 24,000s, even the 200-day moving average. Wouldn't bet on that just yet though, unless we, macro really, really goes bad for Bitcoin, like lots more interest rate hikes, la da da. But yeah, in terms of what's going to be influencing markets for the rest of the week, like I said, FOMC minutes out later today will be important to watch. Ongoing negotiations regarding the US debt ceiling. I mean, the US government's about to run out of money basically, and they're going to need to start issuing debt if they're going to refill their coffers. And if they can't agree on lifting the debt ceiling, then there's going to be a default. Obviously, we've been here a million times before, and there's always a last minute deal to avoid a catastrophe. So that's what most people are expecting. But, that might be weighing on these risk assets too, actually, just as we monitor that situation. Another estimate of US GDP tomorrow, US unemployment claims, pending home sales data. Let's see if that's strong, like the new home sales data earlier this week was. UK retail sales. This is my most important one. Core PCE price index data out of the US. We're talking about inflation being sticky at the moment. The UK numbers, the strong US labour market, the recent US CPI data. Let's see how much this feeds into that narrative. If it eases, that could give these markets a bit of respite, and potentially lift some of these risk assets that might be wobbling as a result of expectations that the Fed's not going to be as dovish. But yeah, guys, hope you all enjoyed the video. Hope you all found it informative, and I'll see you all in the next one.